Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities came under pressure last week on region-specific developments. Major US equity indices started the week on a positive note, supported by an inline personal consumption expenditure data that boosted hopes for an early rate cuts by the US Fed. Markets came under pressure towards the end of the week, driven by surge in US bond yields and sell-off in one of the apparel's major. Asian equities remained under pressure, driven by foreign investor pullouts in the Greater China markets. Data showed China's augmented fiscal deficit widened in the month of May on faster government bond issuances, while industrial profits stayed flat sequentially. For the week, Hong Kong, China and Taiwan markets fell by about 1 to 2%, while Philippines market rallied 6%, followed by Indonesia that was up 3%. Back home, Indian equities rallied for the fourth consecutive week. The Nifty index rose higher on the first 4 trading days of the week, touching a new all-time high, up 2.2% for the week, driven by foreign investor inflows and strong core sector growth data. Broader markets underperformed the Nifty index this week, with the Nifty Mid-Cap Index up 0.6%, while Nifty Small-Cap Index was up 0.5% for the week. Among sector, telecom, energy and IT led the winners with gains of over 2.7% for the week, while realty and metals led the losers with cuts of over 2.4% for the week. Indian fixed income market came under pressure last week amid rising US bond yields and likely profit booking by investors ahead of India's inclusion in the JP Morgan EM Sovereign Bond Index by the end of June 2024. The 10-year Indian government bond yields rose 4 basis points to close at 7.01%, while the 3-year and 5-year Indian government bond yields rose 2 basis points each. The INR appreciated 0.2% for the week to close at 83.38 per dollar as the impact of rising crude oil prices, higher US bond yields and stronger US dollar were balanced by improving foreign investor inflows into domestic equities. INR gold fell 1.4% for the week. Brent crude oil rose 2% for the week to close at $86 per barrel as investors weighed poor US fuel demand against falling US personal consumption expenditure data for the month of May, boosting hopes for an earlier policy rate cut by the US Fed. For the month, crude oil has gained almost 6%, driven by Middle East geopolitical risk premium and US economic and crude stock data. Coming to macro update for the week, the first was on India's core sector, or 8 core industries which comprise nearly 40% of the index of industrial production, recording a growth of 6.3% year-on-year in the month of May 2024, compared to a 6% growth recorded in the previous month. Output increased for sectors such as coal, electricity generation, natural gas, petroleum refinery products and steel. However, output contracted for cement, crude oil and fertilizers. The second data was on India's fiscal deficit. India posted a fiscal surplus in the month of May. For the period of April and May for fiscal year 2025, the fiscal deficit stood at 506 billion, or around 3% of the budgeted estimates for fiscal 2025. The total net tax revenues for the period stood at INR 3.2 trillion, or 12% of the budgeted estimates. Total expenditure contracted by 37.9% year-on-year and stood at INR 6.23 trillion, or about 13% of budgeted estimates, driven by a decrease in capital expenditure and current expenditure. For the month of May, India posted a fiscal surplus of INR 1.6 trillion, mainly due to the higher than budgeted dividend of INR 2.1 trillion by RBI compared to the budgetary expectations of nearly INR 1 trillion. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.